Hey everybody, I just wanted to do a very quick overview video, and I'm going to start us off with Apple, which is basically the reason why we sold off today. Or maybe it was Jim Cramer ringing the bell. Well, either way, we sold off. So if we're just looking at this news piece, it dropped right in the afternoon. Apple to slow hiring and spending for some teams next year. It wasn't very specific. Basically said Apple plans to slow hiring and spending growth next year in some divisions to cope with a potential economic downturn, according to people with knowledge of the matter, basically insiders. So let's go ahead and take a look at the technicals. Now, yesterday I did tell you guys that Apple was kind of getting a little bit overextended. We were hitting the top of this resistance trend channel. Now, I do want to kind of explain all the different lines that are going on here because there are quite a bit. Every single one of them is important in my opinion. So let's just start with this line right here. This line has acted as support, and you can see that we rallied hard many times off it. So we rallied hard right there, rallied hard right there, and we basically almost touched this, rallied hard right here. Now this top trend line has been acting as resistance right there, right there, right there, and right here. And you can see that we recently broke out of it. This trend line right here, along with this trend line right here, is a falling wedge, which we broke out of as well. So you can see once we broke out of this downtrend line, we produced a pretty strong rally, as well as once we broke out of this one, we produced a strong rally as well. Now, another thing to note is when I zoom in a little bit, you guys can see that we actually bounce off of this trend line right here. Very clear bounce. So you can definitely tell that this one right here is pretty significant. So now, what is this line right here? So this line right here is basically saying, hey, double top. So what was this double top right at? It was at 151.74. We hit 151.57, so pretty damn close to being a perfect double top, just a few cents off. So let's throw on the Bollinger Bands as well. You guys can see that we're at the top of the Bollinger Band, we're at the top of the trend channel, and we're basically at that double top area. So to me, it's not very surprising that we are selling off and we sold off this much. So I mean, we sold off, let's see, like a little bit over $4, like $4.50 exactly from the top. So that's quite a bit. I mean, that's a little bit over 2%. So let's go ahead and take a look at the expected move. So if we're looking at the expected move on Apple, I mean, the low side is 145.19, the high side is 155.15. Now, would I really want to be shorting Apple from here? I mean, not really. If anything, I'm looking more for a short-term position. So I'm talking like call options here. Now, what I'm looking for in specifics is for price action to actually fall down to this little intersection right here. So I'm looking at this trend line right here and this bottom support line. So if we do fall to something very close to that, which does happen to line up with this 50-day moving average, I do believe the risk to reward will be pretty decent because this 50-day moving average will act as support. This line right here will act as support. This line right here will act as support. And we will be below the expected move of the lower range. So, the risk to reward is pretty clear. If we do break underneath here, and I mean close underneath here, then yeah, you're going to want to get out. And then if we do rally off here, we could see a pretty decent rally because that would be a bounce. And then, ideally we would want to go all the way up to this top right here to the next area of this top resistance line. So that's just kind of my thoughts for Apple. I wouldn't want to short. I would want to pick up a short-term call option or something of that nature. But I also wouldn't want to hold after earnings because there is so much uncertainty that shows up on this week of earnings. We have all these mega cap earnings, plus we have interest rate hikes, plus we have FOMC, plus we have GDP data. So, right now, if we do sell off a little bit more tomorrow, then yeah, I'm going for that move. Now, SPY right here. So SPY has basically just been chopping around, and this little area right here has literally been the biggest thorn in everybody's ass because it's literally a bull trap and it's also keeping bears from being too bearish. So if bears wanted to be really bearish, they could take all of these puts, but at the same time, we could always do this quick gap and go. So that's what's keeping bears from being too bearish here. Now, bulls, on the other hand, they're trying to get this. They're really trying to get this, and bears are just like, oh, these stupid bulls. We're gonna try and trap them with this gap right here. So there's all sorts of stuff. There's like literally psychological fuckery going on with this gap right here, and it's been left unfilled for quite a bit now. It's been like a little bit over a month. So definitely some huge psychological traps going right here. So where are we right now? We are literally in this moving average sandwich. So we bounce off the 20-day moving average. We're not quite at the 50-day moving average. But if we do break above this 50-day moving average and we do break out of this falling wedge right here, it wouldn't surprise me if we just did a quick gap and go. Now, what happens after 400, I have no idea because like I said, there is so much uncertainty for next week with all the earnings, the GDP, FOMC, interest rate hikes, all of that. So I really don't know what is going to happen if we fill this gap. So where is the hard support? Well, hard support is kind of showing up at 370. So if we do break below 370, I do believe that we could possibly try and retest this support line again. And then let's just go look at the weekly time frame. I mean, we still have this weekly, and this could act as strong support right here. It's at 343.35. So that is a pretty strong sell-off. And that kind of would mark being pretty damn close to the end of this falling wedge right here. So Qs, the Qs do look a little bit more bullish. So we are kind of in this falling wedge pattern, which we did break out of. And where are we right now? We're seeing something similar to a triple top. So if you guys look right here, we had this prior gap zone right here. And the start of this gap is right around what is that? It's like 294-ish. And if we do want to go and fill this gap, that's going to be right around 299. So right now we're kind of stuck in this triple top area, as you guys can see. So top right there, top right there, top right there. And we actually made it below the 50-day moving average. So we're also in this moving average sandwich where we're between this 20-day moving average and the 50-day moving average. And this 20-day moving average is starting to curl up a little bit. So, right now we're really just moving sideways. But if we do hold this 50-day moving average for a little bit, I wouldn't be surprised if we go and fill this gap. Now, what happens after this gap? Like I said, I really don't know because of all of what's happening next week. So let's take a look at Google. So right now, Google is kind of just trading within this wedge right here. So we are kind of at support right now. And right now, we do have this 20-day moving average that's colliding with this 50-day moving average. So we did kind of see a pretty hard reject off this 20-day moving average right here. So where are we right now? We're at 109.91. We did bounce off right here, as you guys can see. And let's just take a look at the expected move right here. So the expected move, on Friday, Google was at 112.77 split price. Downside is 107.35. Upside is 118.18. We clearly did not make it there yet. So 107.35. Let's see, that'll be, right around this area right here. I mean, you have to remember that Apple is like a $2,000 something stock. So, a little deviation isn't crazy. But strong support does show itself right around 106.25. Now, if we do break below 106.25 and we break out of this little wedge right here, then, we could potentially see this gap down if Google earnings are not good. So do keep in mind that this has actually never been filled before, as you guys can see. So this gap is right around 97.82. Now let's look at Tesla. So Tesla right now, it's also in a little wedge right here. So right now, we did try and break out. We rejected, as you guys can see. So rejection right there, rejection right there, rejection right there. But we are above the 50-day moving average. The 50-day moving average is at 717.80. We're at 721.64. Earnings is going to be on Wednesday after the close. So right now we do have this positive sloping 20-day moving average. And, a lot can happen. On earnings, maybe we break out of this wedge, or maybe we break down below. So if I'm looking at the downside, I'm looking at 625.66 being a pretty strong support. As for resistance, I'm looking at 791.71 to be a pretty strong resistance. Now, if we do break out of 791.71, then, there could be a lot of upside. Let's look at Microsoft here. So Microsoft, I'm looking at three things here. I'm looking at this support line right here, and you can see that we produced massive bounces off this support. We broke underneath it slightly, but we came right back up. And I am looking at this resistance line right here. So let me just take off the moving averages so you can see that better. So rejection right there, rejection right there, rejection right there, rejection right here. A little false breakout right there. Let's bring in the moving averages again. This does happen to line up with the 50-day pretty damn perfectly. And right now we are seeing this positive sloping 20-day moving average, and it could produce a potential crossover. Right now we're at 254.25. Where's this 20-day moving average? It is at 259.01. So when that news dropped on Apple, we did sell pretty significantly on Microsoft. Now, what I want to pay attention to is this resistance line right there and this support line. We are kind of just chopping around between it. But if at any point we do break below this 247.16 area, it does look a little bit cruddy, and we could potentially fall down to 235.46, which is acting as support right here. As you guys can see, bounce, bounce, resistance, resistance, resistance. Now, let's take a look at XLF. So if we're looking at XLF, we have this falling wedge pattern. We broke out of it. And let me just zoom in a little bit. We do have this prior resistance line right here. You guys can see rejection, 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 rejection. Almost came up here. And, maybe this could be considered rejection off this line. But we also do have this 50-day moving average at 32.82, which could act as rejection. We also do have this little gap right here at 33.59 if we do want to fill that. XLE. So XLE is pretty interesting because we bounced off this 200-day moving average once, twice right there. We shortly fell underneath it. And now we're kind of rejecting this 20-day moving average at 71.28. So now we're kind of in this little sandwich between the 200 and the 20. And we'll see, do we rally? And if we do rally, where do we go? I do believe that stronger resistance could show up right around 73.20. And if we do break below this 200-day moving average, I'm looking at this longer term support line right here that could potentially catch that move. Let's take a look at UVXY real quick. So today, just off that one Apple news drop, we went all the way from 12.17 to 13.13. I mean, that's a pretty nice move off there. And it essentially moved 4%. So let's go ahead and look at what VIX did. So if we are looking at VIX right here, I was talking about VIX being basically at the 200-day moving average the other day. So that was right here. We did kind of have a small little bounce right here. But right now, ultimately, what we want to do on the VIX, if we're bearish on the market, is we want VIX to get back above this trend line right here. So essentially, it's got to make it back above this 20-day moving average and this 100-day moving average. So that's going to show up right around 27.23, 27.33-ish. So if we do break above that area, we do want to get above the 50-day moving average as well, which is 28.19. But in all honesty, if we do get back on this trend line, I would see that as pretty bearish for the markets. If we do break below this 200-day moving average, I would just zoom out a little bit. We do have support right here. So support, support, support. That would be right around 22, like the low 22s, like 22.30, 22.15-ish. Let's take a look at VXN. So one of the reasons why I do feel like we could just pump just a wee bit more on the Qs is because, I want to see a perfect bounce off this 200-day moving average on VXN. Also do note that we do have the support. So support, support, support. What do you know happens to line up with the 200-day moving average? And that's essentially going to be at 29, let's see, 29.40. So if we do produce a bounce at 29.40 on VXN, be careful. This is NASDAQ volatility. HGX, this is the last one I want to go over. So HGX has kind of given us hints in the past. It is the Philadelphia Housing Index. So we can see that this trend line right here is very, very important. It's basically rejected the last many, many times. So rejection, 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 rejection. Let's see, rejection, rejection, potential rejection, question mark. So the difference between this move right here and all of these other moves is that this was just a strong impulse rally. Now, if you look right here, we have this rally, fade, support, rally, fade, support. Right now we're kind of, let's see, we're slightly below the 50-day moving average. So if at any point we do see a strong sell-off on HGX and we start breaking underneath this trend line, but we see the Qs and SPY really take off and they're rallying, they're filling gaps, I would be very, very cautious because this has basically foreshadowed big sell-offs in the past where this was selling off before SPY and the Qs. So that's basically all I got for you guys. Definitely watch out tomorrow. We got Netflix earnings that could definitely shake the markets. Netflix has this tendency to spook the markets because it has this chain reaction just based off of their subscriber growth. So if we do see really, really bad subscriber growth, really bad guidance, then that could kind of send the rest of the market selling off a little bit. So definitely do watch out for that, you guys, and I hope you enjoyed this video and have a great one.